Hi, Mark Yegge here, hedge fund manager and wealth architect. And in the next few minutes, we're going to be talking about our master course called Trade Like a Pro. And listen, no matter what system you trade, no matter whose software, whose course you buy, you need to master some of the components that we have in this master course. So I'm excited about letting you know what those are, teaching them to you. Hopefully you'll implement them in your current trading or your future trading. And you won't make the same mistakes that you may have made in the past. So here we go. Without further ado, Trade Like a Pro, the Master Course. Welcome to Trade Like a Pro, the Master Course. So listen, in any key trading system, anything that you're going to do, you need to learn some really critical skills. Now, if you have those skills, you'll probably have a better chance, not a guarantee, but a better chance of making money in the markets. So in Trade Like a Pro, the course that we have, but in any system really, you need to start with the right stock. You need to be in the right market. You need to find the right spot on the chart. That's really, really critical. And then you need to ride the trend and protect your downside. No matter where you trade, no matter whose system you look at, no matter what course you buy, those are the things that you need to know. So pay attention here because we're going to go into some of those things in the next few minutes that'll make you a better trader. So a lot of people think, well, you know what? If I just pick the right stock, I'm good. You know, if I bought Amazon back in 2005 and just held it, you know, and now it's over 3,000, I'd be a multimillionaire or whatever. Or if I had just bought Apple when it was in 2006, when it was 350 or whatever, now I'd be 150, I'd be a multi-billionaire. The problem is you didn't. And most people don't, right? You don't ride it for that long. You think you're a buy and hold investor, but most people just never buy and hold. They just forget about it. So they think that picking the right stock is the critical component. They watch Kramer, or they watch the Motley Fool, or get some newsletter that tells them what stocks to buy, or they watch some show. That's not the answer, guys. The answer is not what stock you pick or picking the right stock. That's a component of it, but it's not the be all end all. There's more, as you'll find out as we go through this. Then other people say, well, you know, a lot of people on CNBC say that the market's going to crash. So they've sat out for the last 4 years while the market's just gone up to record levels and they've missed out on all those gains. They get overcome by fear, and fear is really a debilitator when it comes to the stock market. And so some people think, well, I just need to know when to be out, and then if the market crashes, I'll just buy back in, like Warren Buffett. You know, he picks everything at the bottom. He's a brilliant guy. Yeah, he does some of that. But you never know when the stock market's going to crash, when it's going to go down. And if you think you do and you're out, you're going to miss out on a lot of gains. A lot of people do this. Have you ever done this? Maybe average down. You go, well, I bought the stock at 100 and now it's at 90. That's a 10% discount. I love it. With, you know, managers gone insane, right? We get it on sale. So let's buy it at $90, and you average down and now you've got a $95 stock. And you think, well, if it goes back to 100, you'll make twice as much. Well, you won't. Because a lot of times when those stocks go to 90, they go to 85 and then 80. Sure, they can bounce, but generally stocks tend to trend. And so what normally happens with a lot of people, and tell me if this is true for you, because it certainly happened to me, you buy it at 100, you average down at 90, you might even average down when it goes down to 85 or 80, and you go, okay, great. And then you start running out of money, and you're like, oh man, I'm putting my money between, on this crazy stock that, you know, hopefully is going to go back up from 80 to 100. I mean, that's a pretty big move. It's got to go up at least 25% to get from 80 to 100. So you say, you know what, the next thing is you figure, well, it's a good company. I'll just be a buy and hold investor. That seems to work over the long term. You know, market always goes up over the long term. And so you become a buy and hold investor. Problem with a buy and hold investment strategy is that money becomes dead money. That money that you could have been using to make money on things that are moving up is now just sitting there in a stock that is 80, maybe 85, might trade from there. You're not going to sell it until it gets back to 100. Mentally, you're not prepared to do that. So I don't know if this has happened to you, but it happens to most people at least once in their trading career. They think they picked the right stock. They think they can time the market exactly. And there is a component of which you can do of market timing. They try to average down. A lot of times when it doesn't work, they just say, well, it's a great company. I'll just hold on to it. You know, they're making good software. They're making good hardware. I'll just hold on to it. Problem is, it doesn't work like that, guys. This is not an innate thing. This is a skill that you have to build. And so you got to get away from that conventional thinking. And you got to wonder, why isn't everybody rich from trading? Well, it's a great question. First of all, like I mentioned, it's not innate. You're not born with the skill, it's learned. And I'm going to tell you one thing. It's the opposite of anything that you think is right. That's the key is like, if you think you should buy something, it might be a good time to sell. If you think you should sell something, it might be a good time to add more. So it's a learned skill, and you have to kind of go sometimes against your dominant emotions. All right. Then you need to have a formula, a system, a methodology, and most people just don't have one. I mean, if I told you that I'm going to give you a week to beat Mr. X, we don't know who Mr. X is. He's going to be playing you in a round of golf. Now, you've never played golf before, but if I told you all you have to do is beat Mr. X and you're going to get $1 million, what would you do? Would you just kind of go to the range and grab a bucket of balls and start hitting them? No. You'd probably get the best coach that you could find. You'd probably listen to everything he says. You'd be thinking about golf. You'd be practicing your shots. You'd be practicing them the right way. You would have a system of how you set up to the ball, the club to use, the way you swing, the way you hold yourself, and a mental system as well. So everything that's successful in life, whether it's golf or trading or a relationship, you have to have a formula, a system, a methodology, a way of working that works, a proven system. And then you have to have good risk management. This is where a lot of people get stuck, is because risk management is not very studied. It's not very sexy, right? How much money are you going to lose? How can you manage your losses? How much should you risk on a trade? Really, really critical component. And if you're not paying attention to it, number one, if you're thinking the stock is the answer, the right stock, you're in for a big surprise, and you probably already learned a lesson, which is maybe why you're watching this master course. Then there are people that are trained and untrained. There's nothing wrong with being untrained. You just have to know that you're untrained. You need to learn that you need to become trained, because successful people are generally trained. They don't get lucky over and over and over again. They've got a formula system, and they've got training in whatever field they're in. I don't care what field they're in. They've got some training. What's mentorship training, course training, coaching. They invest in themselves. Untrained people, they look for the shortcut. They don't really invest in themselves. They're always looking for the next easy way to do things. And there's two ways to make money in the market: the fast way and the slow way. And the fast way is the slow way, which basically means you need to learn it from the ground up, and you need to learn it right. Okay. Most things are not easy in life until you understand them. Think about the first time you drove a car, picked up a golf club, or went bowling. They're not easy that first time. You have to understand the components of that formula and what makes them work. So here are three keys to proper trading that you need to know no matter what you do, no matter whose course you take. And so the first one is you got to get the probabilities in your favor. Look, when you buy a stock, you've got a 50% chance of being right, because there's another smart person on the other end of the trade that thinks that he's right by selling it. And so you've got to get those probabilities working in your favor, number one. Number two, like I mentioned before, you've got to manage that risk. And risk management is a very critical component. Number three, like I've just mentioned, you've got to have a system. And so let's talk about getting those probabilities in your favor. Listen, I don't know if you know some of these facts, but I'm going to throw them out to you. Statistically, 70% of a stock's performance comes from the direction of the market. Now think about that. It's called the stock market because it's a market of stocks, which makes sense. 70% of a stock's performance of the market's going up is going to come from the direction of the market going up. The stock market, a rising tide lifts all boats, right? You've heard that saying before. And the same thing happens in the other direction. If your market is going down and you're trying to buy things and trying to scoop them off the bottom, but you're caught in a downtrend, you're like a salmon trying to swim upstream to spawn. And so you don't want to be that salmon going against the current. You want to go with the current. Things are a lot easier in life when you go with the current. And so you need to know that fact. Another one that I think is really, really helpful and important in trading is that 34% of a stock's performance comes from the performance of its sector. So for example, if electric vehicles are taking off right now, then chances are whatever electric vehicle company you buy is going to have a better chance of going up. In fact, 34% edge in that case if you're buying electric vehicles companies. In other words, don't be shorting them and selling them. You want to be buying them if everybody else is buying them, especially if the big money's buying them. And now let's talk about following the leaders. So just using electric vehicles, if the electrical vehicle sector is moving up, chances are the leader in that is moving up. In fact, the leader is probably leading that whole sector. And in this case, let's talk about Tesla. Tesla's the leader in electric vehicles. And so if Tesla's going up, chances are the other EV companies in that sector are going up, and vice versa. If it's going down, the same thing is happening. And so you want to not just follow the leader in the stock, leader in the sector, leader in the industry. You also want to follow the leaders in the market. Who are the big axes? They call them the axes. Who are the axes that are making a market in that trade? Furthermore, who's the big money that's propelling that up? Because you can find that on the chart. Who is the big money that's moving this stock up? And they're going to support it when people start to sell. When the market starts to drop, you're going to get big money coming in to support the millions or billions of dollars they've invested in the stock. So you've got to follow the leaders, whether it's in the sector or the industry or the market makers, the big money on the Wall Street. What are those leaders doing to keep up those stocks and keep them driving higher? Okay. And then listen, if you manage your risk, your money will replenish. So part of being a good trader is knowing that you have probabilities in your favor, but you're going to lose. The probabilities are you're going to lose probably 1 out of every 3 trades, maybe even 2 out of every 3 trades. It's how you manage those losses that makes the difference. But listen, losing money on a trade is not the end. It's just part of it. We're going to lose. Nobody's perfect. You have to admit that. But once you lose a little bit of money, know that the money will come back. It's not the end of the game for you. You should be able to continue to replenish that money because 1 out of every 3 trades or 2 out of every 3 trades will be successful for you if you're doing it right. And that money will come right back. You just replenish the money and you keep moving on and you keep getting better. So the next part is how do you manage your risk? Well, one of the sayings we have on Wall Street is that your first loss is your best loss. So take it, keep your losses small, but you've got to give your stocks enough room to breathe. And we teach some formula around that so that you can let your stock breathe, but not make it breathe so much that you lose a ton of money. So keep your losses small. We call it killing the monster when it's small, right? Imagine if we'd gone back in time and we were able to get Hitler when he was a baby and get rid of him, right? Kill the monster when it's small. Don't let it become big. Don't let the losses become very, very big in your portfolio. Because you'll always be able to make up a loss if you have a good system. But if it becomes too big, then you get dead money like we mentioned before. There's a proper risk-reward ratio for you. Okay. Paul Tudor Jones, one of the most successful hedge fund managers on Wall Street, uses a 5-to-1 reward risk ratio. So for every dollar that he risks over time, he's trying to make $5. That's a pretty high reward to risk ratio. It can be done. It's a little harder. You have to have a really good system. You have to have really good discipline, but you got to know what that reward to risk ratio is for you. And I'll help you figure that out. And then you've got to know your ideal risk number. There's a number that's based on your past performance, your risk tolerance, your mentality, right? The success rate you've had and the percentage of success that you have in those successes. And all that comes together to figure out what the best risk number is for you. You've got to know that. Otherwise, you're risking too much and you might kill your account, or you're risking too little and it doesn't even matter if you do well because it's not going to show in the performance of your account. Third, you have to have a system. Now, in order to have a system, you can't just have any system, although a lot of systems do work. You've got to have a proven system, a system that's been proven over time, hopefully by some successful people. Maybe that's even you, but you've got to make sure that it's repeatable in all markets, right? And it's got to be a consistent system that no matter what, you can consistently count on the fact that if you do a certain number of trades, you're going to make a certain amount of money because you're being able to use that system. Now, any good system is going to include mindset, emotion, risk management, stock selection. We talked about it a little bit. Market timing, that's a component of what we do. Stock analysis, stock timing, the time to be in and the time to be out, all of those things. These are all critical components of any system. So you need to make sure that your system addresses all of those things. I have a course, a trading course that I'm very proud of. It's not my highest level course. It's kind of the intermediate level course that if you've maybe traded a stock before in your life, or maybe even if you haven't, it's going to teach you how to do it right from the ground up. It's like picking that golf club up for the first time. Or maybe just saying, I've swung the golf club, but I've never really been trained to properly do it. And so here's the basic outline of how we go about this course. It's first of all, it's online training at your pace. We got quizzes and tests and things like that, just like any course would have. But we start with the philosophy. What's the philosophy of trading in the market? We buy the right stock in the right market at the right spot on the chart. And then what we do is we try to ride that trend. and we manage our risk. And so that's basically the philosophy of Trade Like a Pro. The next thing is we really dig down into what's the market doing. Remember, it's a market of stocks, so we want to know if the market's doing well or it's not doing well. What trend are we in? Then we set up our screening and our watch list. We're going to talk about how we screen for the right stocks, because we don't want to be in every stock. There's certain stocks that are just dead money, certain stocks that are going down. There's a certain few that are doing the right thing for us as investors. So we want to screen those to find those. We want to watch them carefully and then find that right spot on the chart where we can buy them. I'll show you how to do that. Then we do something called price volume analysis. When price and volume are working together, it kind of paints a really clear picture of the probabilities of what's going to happen in the market. Then you want to own your own trading plan. You want to create a trading plan and you want to stick to it. You want to have the discipline to be able to stick to it, and you want to own that trading plan. Then you're going to define your position size. We talked about that in risk management a little bit ago. Finally, you're going to want to do some trade entry. How do you enter the trade? Where do you enter the trade? What's the best spot? What do you do if it doesn't work out in your favor? What's your target? What's your add-in strategy? And then speaking of strategy, what is your strategy? What is the psychology? If something goes down against you, are you going to freak out, or you just know that's part of the breathing process? If something goes up, what's your psychology for adding more? Are you going to have fear of missing out, FOMO? You can say, oh no, I need to dump more money into it because it's getting away from me. Or are you going to manage those emotions? That leads us to the very important part of mindset, emotions, and best practices. Really critical for you to get that. And then finally, we're going to give you some tips and techniques for maximizing your trading. Listen, I've been doing this for a long time. I know there's a time for market orders. I know there's a time for limit orders. I know there's a way to split the bid and the ask. There's a lot of different things that you should know to be a really great trader, and Trade Like a Pro has all of that. It's really a complete trading system, but it's not an extensive, 4-year university degree to learn how to trade. It's easily digestible in several modules. It's online, so you can trade at your pace and then start to apply it at your pace. But listen, I can keep going on and on for now. Now, you might be thinking, well, this is too expensive. Now, if you have this thing in your mind that something's too expensive, this is probably why you need to buy the course, because you should be able to say, I know that this is good for me. I'm going to purchase it. I'm going to enroll in it. You shouldn't have to think that it's too expensive. If it's too expensive for you, and it really is, like, for example, the thing is set up to pay for itself in just a few trades. So obviously, if you only have $1,000 to trade, well, it's a little bit hard to make that back on $1,000. But if you got 50,000, 100,000, 200, a million, 2 million, 5 million, 10 million, whatever you have, this thing will be, it's designed to pay for itself in a few trades. What we try to do is catch that right ideal spot on the chart. And if you do that right, the thing turns green immediately. I mean, right after the thing turns green, you're going to get your few $100s back that you're spending on this course. So if it's too expensive, I don't know if that's true for you, but because if it's too expensive, you probably absolutely need to buy this so that you can make enough money so that you don't have to say that things are too expensive when you want to buy them. But maybe you just think you're smart enough to learn this on your own. That's fine. I do have a saying that says this: if you always do what you've always done, you'll always get what you've always gotten. And so how's that been working for you? Maybe you have learned some things on your own, but maybe you've paid some severe tuition for it. I've kind of short-circuited that, and I don't want to say shortcutted it, but I've kind of made the mistakes for you. I've done this a lot, and I know the emotions. I know the market cycles. I know the things that happen to you. I know that there's a tendency to want to average down when you should be selling. There's a lot of things that I know that I can just, if I can just avoid you having to make one of those mistakes, it'll be worth your time and investment in this process. You might be thinking that you'll just think about it. I'll wait and decide later. Well, let me tell you this. How much is it costing you every month not to decide? So let me tell you a little bit about the success of my systems. So I set my systems up to make about 40% a year. One of my distant mentors, his name is William O'Neill, one of the most successful investors of all time. And William O'Neill has a saying that says this: if you're not making 40% in the stock market, you're doing something wrong. And in my hedge funds, we consistently over years and years and years have gotten an average of about 40%. That's a lot better than you might be getting at 6 or 8 or 10% investing in just mutual funds. And that's what stocks do over time anyway. They do about 9% over decades and decades of studies. And so if you're going to wait and decide later, let's say that you could get 40%. Heck, let's cut it off, cut it in half, and say that you're investing $100,000 and you could get 20%. Well, that's $20,000 a year. Every month that goes by, you're losing thousands of dollars by just deciding that you're going to wait till later. So do yourself a favor. Make your decisions now. Winners make decisions. And so I want you to be a winner. I want you to be with me on this. You don't have to buy my course. You can buy anybody's course that you want, but make a decision and do something, because if you continue to do the same thing, you're going to get the same results. And so you also say, how much have I lost on a bad trade? Or how much will I lose on my next bad trade? Because they happen. They happen a lot. They happen to me. Just how do you manage them? Do you know how to manage them? Well, you should. How much is that going to cost you? And then compare that to the cost of this investment that you're making in yourself. You're not making this investment in me. You're learning something you're going to be able to use for the rest of your life. Isn't that worth something? Isn't that worth a few $100s to invest in yourself on something that could make you thousands or even hundreds of thousands of dollars in your lifetime? Well, I think it is. So I'm going to quit talking now. And I'm going to say, listen, if you're interested, if you want to do this, if you want to change your life, I know that we have a technology. I know that I'm going to teach you a method that's going to help you make a lot of money in the market while protecting your risk, while managing your downside. I know this works. I know that it can work for you. And if you want to invest in yourself and you want to enroll in this course right now, there's a button at the bottom of this page. Please click on it. Join me on the inside of Trade Like a Pro, and I hope to see you on the inside. Thanks for your time.